SpaceX, SPCX, great company, hard price. This video is for research and education only. It is not financial advice. SpaceX is finally moving toward the public market under the ticker SPCX. And the question is not whether SpaceX is an extraordinary company. It clearly is. The real question is simpler and harder. At what price does an extraordinary company become an ordinary investment? Here is the framework I would use. First, separate the company from the stock. SpaceX has three stories inside one ticker. The first is Starlink, the satellite internet business. This is the financial engine. Public reports and filing analysis point to roughly $11.4 billion of Starlink revenue in 2025, more than $4 billion of operating profit, and around 10 million subscribers by early 2026. That is a real business, not just a dream. The second story is launch. Falcon, Dragon, and eventually Starship give SpaceX a lead that is very hard to copy. Reusable rockets change the economics of access to orbit. But financially, launch is not the whole valuation. It is strategically priceless, but its direct revenue is much smaller than the market story implies. The third story is the controversial one. AI. After XAI and X became part of the wider SpaceX story, investors are not just buying rockets and satellites. They are buying Elon Musk's integrated empire, connectivity, launch infrastructure, AI models, data centers, and even long-term ideas like orbital compute. That combination is exciting. It is also why valuation discipline matters. At a $1.75 trillion valuation, SpaceX would trade at roughly 94 times 2025 revenue and more than 260 times adjusted EBITDA. That is not an aerospace multiple. That is a mega-cap AI platform multiple, plus a monopoly infrastructure premium, plus a Mars option. So how should we value it? I would use a sum-of-the-parts approach. Starlink may be worth $400 to $700 billion if it keeps growing subscribers, expands margins, and avoids heavy regulatory pressure. The launch business may be worth $100 to $250 billion because it has strategic scarcity and government relevance. Starship is an option. If it works, it can rewrite the cost curve of space. But options should be discounted. I would give it $100 to $400 billion depending on execution progress. AI and X could be worth another $100 to $300 billion. But this is the highest risk piece because it burns capital and adds governance complexity. Add those together, and my comfortable range is not $1.75 trillion. My conservative to reasonable range is closer to $800 billion to $1.1 trillion. A strong bull case can reach $1.3 to $1.75 trillion, but that requires a lot to go right. That leads to the practical question: should ordinary investors buy SPCX? My answer? Do not chase the IPO blindly. If the IPO price is around $135 per share, and that represents about a $1.75 trillion valuation, I would treat it as a watch list price, not a full position price. If someone really wants exposure, I would keep it tiny, maybe a 0.5% to 1% of a portfolio. That is a learning position, not a conviction position. For me, a more interesting first buying zone would be closer to a $1 trillion valuation. If $135 equals $1.75 trillion, then $1 trillion is roughly $77. The zone between $60 and $80 would be where I start paying closer attention. The $45 to $60 zone would be much more attractive if the business fundamentals remain intact. But price is only one side of the decision. The key checkpoints are Starlink subscriber growth. If growth slows and average revenue per user keeps falling, the cash engine is less powerful. Starship execution. If Starship reaches reliable payload delivery and helps deploy next generation Starlink satellites, the story improves dramatically. AI capital spending. If AI keeps consuming huge amounts of cash without clear revenue acceleration, the market may start valuing SpaceX less like a pure space winner and more like a complex conglomerate. Governance. Elon Musk reportedly retains overwhelming voting control. Ordinary shareholders are passengers. That can be fine when execution is great, but it increases risk when capital allocation gets complicated. And finally, lock-up supply. IPOs are not just about demand. They are also about when early investors and insiders are allowed to sell. What about alternatives? If you want broad exposure, aerospace and defense ETFs like ITA or XR are cleaner and easier for most people. They will not give you pure SpaceX upside, but they also avoid single company IPO risk. If you want space growth, Rocket Lab is the closest public market comparison in spirit. It has real launch capability and space systems revenue, but it is much smaller and much riskier. AST Space Mobile is a direct-to-cell satellite bet. Huge upside, huge execution risk. Intuitive Machines is more of a lunar and NASA contract story. Planet Labs is a data business built on Earth observation, not a rocket company. Iridium is more mature satellite communications, less explosive, but more established. So the final view is this. SpaceX may be one of the most important companies of the next decade. But the IPO may already price it like everything works. Starlink scales, Starship succeeds, AI becomes profitable, orbital data centers matter, and Musk keeps executing across all of it. That is possible. It is not free. For ordinary investors, the better move is patience. Build a watch list. Know your valuation zones. Avoid pre-IPO schemes you do not fully understand. And if SPCX opens at a euphoric price, remember, great companies can still be bad buys when the entry price is too high. My base case: track it closely, buy only with discipline, and let the first public earnings reports tell us whether the business deserves the story.